Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Aldar Properties and Suru Real Estate announced on Sunday that their shareholders have approved the merger of the two companies. According to news agency WAM, the proposed merger will create a stronger, more diversified company. Subject to the satisfaction of the conditions of the merger, Aldar and Suru will apply for a resolution from the UAE Minister of Economy. On the effective date of the merger, Suru shares will be delisted from the Abu Dhabi Securities Exchange, and Suru would be dissolved as a legal entity. Aldar will then be named Aldar Suru Properties PJSC. Subject to the conditions, the merger will become effective in June 2013. The Jebel Ali Free Zone saw 454 multinational companies join in 2012, an increase of 26% on the number of new joiners the previous year. The latest data shows that 27% of the new companies were from Europe, 25% were from the GCC, 21% from Asia Pacific, 9% from the Americas, and 18% were from Africa and West Asia. Trade remains the main driver of the Free Zone's growth. 83% of the new companies are engaged in trading, 9% in services, and 7% are in industrial activities. The total number of active companies in JAFSA at the end of 2012 stood at 6,918 and are estimated to have generated business worth $82 billion last year, which accounts for more than a quarter of Dubai's total non-oil trade. The risk of trade dominated proceedings last week, with political uncertainty in Italy and the US weighing heavily on investor sentiment. The euro crashed through several key technical levels, giving up more than minus 1.40%, while the British pound shed about 0.26% to close above 150 levels against the greenback. With another week filled with high-risk events, we spoke to Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, for his view on the week ahead.
The deadline for the U.S. sequester has come and gone from this past Friday, and as largely expected, the Democrats and the Republicans could not reach across the aisle in a bid to avoid the sequester, which will see President Obama sign up to $85 billion in automatic government spending cuts. Now, obviously, we've seen this take a very, very large impact on risk sentiment. There's been a large inflow into the US dollar category as well as US Treasury bonds. And we can expect some of this negative sentiment lingering into the week ahead. But looking at the week ahead, once again, we have an action-packed economic calendar. We have up to 4 different central banks announcing their rates. The Bank of Japan are expected to hold rates at 0.1%. The Reserve Bank of Australia is expected to hold their rates also unchanged. Remember, the Governor Stevens has said last week that there seems to be a good amount of stimulus in the pipeline, so we don't expect any changes in the Australian borrowing rate there. Towards the end of the week, the Bank of England also expected to keep their rates unchanged, although there could be some tweaking on the upward side with regards to their asset purchase plan, upwards of $375 billion. The European Central Bank also expected to hold their rates at 0.8%. Of course, the main figure on this week's economic calendar will be the U.S. non-farm payroll figure, which is expected out on Friday, expected to be at 150,000. But this will be a particularly important number this week, considering the emphasis the Federal Reserve has put on the condition of the U.S. jobs market. Remember, monetary policy in the U.S. is continued to be tied to the situation of the U.S. jobs market. So any type of weakening there will definitely see an impact on U.S. dollar forecast. But overall, we expect markets to remain range-bound with a slightly negative bias.